Today is May 7th, 2020. We're going to be taking a look at Bitcoin on the dollar as we've got some shocking new patterns to talk about today. We're going to be looking at a 2017 pattern, as you can see, that played out here, where we had 8 green candlesticks in a row, followed by a 40% correction before seeing further upside. And if we can assume that our recent $3,900 dump is the bottom currently for Bitcoin before the halving that's coming up in about a week, then we can also assume that this is a start to an uptrend. But interestingly enough, you can see we've got here 1, 2, 3, 4, 5, 6, 7, 8 green candles with 3 days to close on the weekly chart. I'm going to talk about how a potential 40% correction may come into play, or the bullish scenario. Once again, we're just going to take a step back and look at the data and keep an unbiased opinion. And we've got a lot to talk about today, so stay tuned. A lot happened in the stock market. We're going to look at why the stock market hasn't yet started its correction, but is just seeing a pullback. And then the NASDAQ potentially correlating with Bitcoin, of course, being the tech side of the major indices. We're going to look at all of this today. But first and foremost, I want you guys to pay attention to this 8 green candle setup that's forming right now, as a lot of us assume that we're going to continue this uptrend. And as you all know, I've been very bullish about Bitcoin in the long term since we've seen this dump. But at the end of the day, if we assume this $3,900 level that we saw take place on March 9th is the bottom, then we can also assume that we're starting a new uptrend. And interestingly enough, when we started the uptrend in 2017 here, you can see also in April into May, we saw 8 straight weeks of green candles before a 40% correction. And as we all know, the Bitcoin halving coming up in less than a week, this could be a prime time for Bitcoin to see one last push to the upside as this candle closes in 3 days before seeing a potential correction. Because right now, everything looks so bullish. We're above all the daily moving averages. And of course, the major indices are seeing strength with the Feds injecting liquidity. And so let's take a look at what's happening right now. Because when we look at this other chart, interestingly enough, we know there's a potential inverse head and shoulder forming here. So I want you guys to pay attention to this. Of course, we decided to top out here twice already at 10,500, and Bitcoin is slowly approaching that $10,500 level. Now, if we were to assume that we wanted to fill the CME gap at 11,750, which we talked about on our video early this week, then we can also assume that Bitcoin is in an uptrend and it's looking to fill that gap. However, we have to be patient and realize that we are at this current resistance level. And you can see we've already tested this once, twice, and a third time today. And knowing that we've tested this 3 times, we can assume that we're most likely going to break through this resistance. And so realize that after we break through this resistance, we still have another resistance level at play, as you can see on this chart. And that's going to be right around that $9,600 area. And if we look at the macro, you can see how this resistance plays apart here, because you can see there are multiple lines dating back to this $14,000 top that we saw on June 26 that allow us to see these resistance levels. And we know that when any sort of asset is moving towards a specific direction, there's always a destination. And so we can assume for Bitcoin, it decided to take a step back and not reach that resistance for a reason. And interestingly enough, when we look at the stock market, specifically the NASDAQ, I saw a comment the other day on YouTube of somebody talking about how the Bitcoin and stock market correlation is a fad. It's not happening anymore. But realize that if we look at the NASDAQ, we're seeing some very, very startling similarities. And so I actually want to pull up this chart here so you can see what I'm talking about. If we look at how the major indices are doing, we'll take a step back a little bit later and look at altcoins, because surprisingly, Bitcoin broke a major dominance level. So I'm going to talk about why altcoins have been seeing big bloody days over the last few weeks and why that potentially can continue. But first and foremost, I want you to realize that if we pull up the NASDAQ, we can also pull up the Qs. If you guys know the QQQ ticker symbol, that represents all of the major tech companies in the stock market. But if we just look at what's happening right now with the NASDAQ, interestingly enough, today we called a short multiple times, not just myself, our analyst as well. And it was because of the price action that we saw here on the daily chart for the NASDAQ. You can see we initially came up here, we formed a higher high, and then we formed a higher low, and then we formed another higher high, another higher low. But then we came up over the last few days and formed a lower high. Now, you could assume that could be the start to a downtrend. However, until price action for the NASDAQ can come back here and test that 100-day moving average as a start, then we can still assume things are bullish in the traditional markets. Now, of course, a lot of people are talking about the fundamentals in the traditional markets not being bullish, but realize that we're just taking a look at the data. We're interpreting what the data is telling us. And at this point, it's showing us the NASDAQ is still bullish. Now, interestingly enough, we look at this price action that the NASDAQ saw, and we pull up the Bitcoin chart here on the 4-hour, and you can see, interestingly enough, we saw this initial higher high form, a higher low. We formed a higher low, and then we also formed, oh, I'm sorry, a higher high, and then another higher low, and then we came back up and we formed a lower high. So similar to what's happening with the NASDAQ, if we look at the daily moving averages for Bitcoin, we're also above all three moving averages, just like the NASDAQ, which if you guys have been following our content over the last 2 weeks, we've been looking at all of the subsectors of the stock market because I feel like it's important for us to dissect that right now, especially in these uncertain times. And we know that the NASDAQ is the only major index that is above all three daily moving averages. When we look at transportation, for example, or we look at finance, we're seeing things are still struggling. Sorry, I just heard a noise in the background. By the way, we've got Dave Mills, Sean, and Alex on our live stream from YouTube. Good to have you guys. Make sure to like the video and subscribe to our channel if you guys are new here. But understand at the end of the day, we're going to have to look at the major indices to tell the overall health of our market. And the NASDAQ at this point is what's correlating with Bitcoin the most. And so that's where I'm going to watch to see, are we going to continue to see new highs for the NASDAQ or not? Because if not, then Bitcoin could very well certainly be at its top. But realize that even if we do see further highs in the NASDAQ, that we still have a little bit of room to go towards that $9,500 area for us to see a bit more upside to clear shorts on Bitcoin. Now, interestingly enough, when we look at this resistance level, you can see in the past, we've seen an excess of price action to clear shorts above that resistance level. And I could be very well confident that if we start to break out with volume here, we could very well break through this resistance level for a slight bit amount of time and possibly head towards that $10,500 level, because that would be a very appropriate amount of excess price action. As you can see, it's not too much to see a wick up here, and then we come falling down, potentially a 40% correction if we look at the last time Bitcoin printed 8 weekly green candles in a row, which was the start to the 2017 rally in April and May. But understand that we saw a 40% correction after those 8 green candlesticks before we saw further upside. And we've all been talking about the Bitcoin halving in less than 7 days. And if we look at history, we've taken a look at these charts in the past, we know that post halving, we're either seeing a downside risk for Bitcoin or sideways price action like we saw in 2016. So for us to assume that we break out immediately after the halving in less than 7 days, I think would be a little bit irrational when we look at patterns of the past. And once again, that's just dissecting the data that we're seeing here. Now, there are some bullish cases, and I'll talk about that right now because the NASDAQ, once again, is still very bullish, and it looks like it's trying to break out to new highs. And so we'll take a look at that. Of course, the NASDAQ encompasses some of these major behemoths like Amazon, which are seeing record highs in their stock price amidst this global pandemic. So it's a very, very big anomaly, and we want to dissect that and understand at the end of the day, this is just an awareness to realize that we have a CME gap at 11,750. We went towards this major resistance level, but we didn't go and touch that resistance level. So we know that Bitcoin's having a cup of coffee right now, but it's yet to see the price action towards that resistance level. So it's really cocking itself back for one more round up, in my opinion, and that's a high probability, and we shouldn't be afraid of that because at the end of the day, I think seeing that $10,500 level before a pullback would be extremely bullish in the long term. And of course, in the short term, it may be quite bearish if we see a pullback, but realize that that would complete this neckline at 10,500. We could potentially come back towards that 64 to $6,700 level where we've seen major support in the past. It was actually the bottom in December of 2019 before we went back above 10,000. So realize that $6,400 mark would be where I'm looking to for another long-term entry. If you guys are in our Discord group, you guys know we posted our long-term entry at 57.50 for Bitcoin, and of course we rode that all the way up to 7,700. Didn't expect it to go quite as bit as or quite as high as it did go. However, realized that it's not always going to be perfect, and we did see quite the breakout in the traditional markets, which justified Bitcoin seeing these type of highs right now. So it's interesting because one of my buddies who owns a hedge fund, we actually had a conversation last year, about 6 to 12 months ago, and we talked about how we were going to prepare for this recession. Of course, Ray Dalio talks about the 10 to 12-year market cycles, and we specifically talked about staying in cash and Bitcoin and not having anything invested in the stock market. And now that I look back, if any of you guys followed that sort of mindset, Bitcoin is at over $9,000 right now. That would have been the perfect way to hedge against all of this uncertainty, even after that crash down to 3,900 for Bitcoin recently. So I think that that's cool. It shows you the resilience of Bitcoin, and it also shows you how Bitcoin is actually one of the major, stronger players in this market amidst this global pandemic due to the fact that it's one of the only assets above all three daily moving averages. And of course, if we look at the weekly moving averages, you can see we're also above all of these weekly moving averages. And the only other market doing that right now in regards to a major indice would be the NASDAQ. So we can compare Bitcoin to the NASDAQ right now in the fact that it's above all of the moving averages and it's looking extremely bullish, as you can see here with NQ1. This is the futures contract for the NASDAQ. Now, of course, it's looking like it's trying to break out towards these new highs. And until we can find a confirmation of that, I think we have to be very precautious about Bitcoin, knowing that we're at these overhead resistance levels. And of course, if the NASDAQ were to break out, or if Bitcoin were to break out, what we're looking for is a push towards 10,500, and then for this to now become support, and then we could potentially enter another long, because what if Bitcoin starts to correlate with gold, for example, again, because we know it switches back and forth, and then it continues to see new highs, goes beyond 14,000, and maybe even beyond 20,000, and it doesn't come back to 6,400. That's definitely a possibility, but realize until we find the destination that it's currently going towards, there's no reason to look at the future because we want to know where's the next stop for Bitcoin. So understand at the end of the day, we have to be aware of all this, and it's all just an awareness. We don't want to be biased on any home team, as I've mentioned before. Now, I want you guys to realize with Bitcoin dominance, of course, we're in such an uncertain time. You can see Bitcoin dominance smashed through that 200-day moving average. That was actually unexpected to me because you can see here on the 24th of March, we found resistance there. Altcoins got a breather, but this time around, Bitcoin went right through with a strong daily candle close above that 200-day moving average. To me, that's very bearish for the altcoins, and I'm not surprised because at the end of the day, there's so much uncertainty in the market. Bitcoin itself is very uncertain for a lot of speculative investors. It's not the most confident asset right now just because of where it's come from and the age of Bitcoin. But realize at the end of the day, it's performing just like the NASDAQ, the top index in the stock market right now. And on top of that, the altcoins are a lot less of a confident hold for investors, knowing that they're a lot newer. And on top of that, there's very little use case for them. There's less adoption. And if you guys know about 51% attacks, it's a lot easier to 51% attack an altcoin than it is to 51% attack Bitcoin. And we know the halving is coming up to cut supply in half. So there's so many positives for Bitcoin to see the liquidity come into it as a preservation of wealth. But for now, we have to realize that the altcoins may be left back during this uptrend because of their uncertainties and investors being extremely precautious right now in comparison to how they were at the start of 2020. So if you guys agree with that, I'd love to hear your comments in the chat or in the comments below. Charles T says, Habibi, you're good. Thank you so much. Majran says, what time frame is that? We're looking at the daily chart here. And Majran says, Bitcoin halving in 4 days, less than a week. Yep. Chris says, to the moon, still 2020. Interesting enough, May 7th, the full moon, potential market cycle and market reversal, right? If you guys follow the moon charts, and how that affects the markets. That's an interesting way to study. We had an analyst like that that taught me personally a lot about that. But of course, that's not as interpreted as just actual data and charts, which is easier to interpret, of course. So anyways, I want to move forward and talk about gold really quick because we know Bitcoin at one point was following gold, and you can see it's barely sitting on the support here at 1680. And if we do come and start to break this support level, it's not all end for assets and major indices in Bitcoin, because realize that seeing capital come away from gold would be a positive thing. So I think something to watch right now is gold to see, is it going to maintain the levels above 1680 and continue its breakout further, or is it going to see a retracement and a correction? Because if so, that capital will go to cash, and a high probability of that happening is if we see another period of uncertainty, which is highly probable, because if we look at the crypto and fear greed index, for example, you can see people are not fearful, they're neutral. But guess what? The economy's still locked down in most countries, at least, and things have yet to open up. People are still at home, calm, and they haven't yet realized the economic ramifications of the pandemic, as we've talked about. So seeing the fear subside right now is very expected, but realize at the end of the day, we still went through all of this, and the ramifications are going to be clear. Of course, the feds are trying their best to ease these hard times for companies, but at the end of the day, they can only do so much. So if capital were to flow away from gold, that capital is going to want to go somewhere. So it can either go to Bitcoin, it can go to major indices, or it can stay in cash. A lot of people are saying that cash is going to be king in the next few weeks, the next few months. But I think over the next 3 days, a lot of this will unfold. As we know, this is the last week for Bitcoin to print a green weekly candle. And if it does, the next week could be the week that we start to see a correction, not just in Bitcoin, but in the NASDAQ, because as we all know, there's still high uncertainty in the major indices, knowing that a lot of these important subsectors, such as the transportation and financials, are seeing so much weakness. If we pull up the financials, once again, we need the financials if we want this market to head anywhere. The market will not go up or down without the financials. We're talking about the Bank of Americas, the JP Morgans and Chase, right? These are the ones funding a lot of liquidity for big projects. So we need the banks to survive. We need them to do well, or we'll see another 2008, which this has yet to even be as bad as 2008. A lot of people are saying it is, but it isn't, because 2008, we saw over a 50% correction. We've only seen about 30 to 40% with the major indices, and they've recovered so much over the last few weeks that we can say that this is not yet as bad as 2008. But if the financials aren't doing good, you can see this daily chart below all the moving averages going ahead and seeing lower levels today, starting to come back down. Things could look really bad, and the NASDAQ and the tech could also be pulled down by the financials as well as the transportation sector, because we know with the airlines, they're not doing so well. But not just the airlines, you can see the overall transportations are just struggling right now below that 50-day moving average, and we need transportation to succeed if we want to see any sort of a proper economic recovery. So I saw a headline today by Jim Cramer saying the virus has split our economy in half. We've got the tech and we've got everything else. Everything else is suffering and the tech is doing great. Well, if everything else is suffering, at one point or another, it's going to affect tech. And so realize that number one, Bitcoin is following tech, so it's very strong as an asset during these uncertain times. But at the same time, the overall economic health could drag down Bitcoin and tech for the short term, knowing that the ramifications have yet to be seen, and that we're seeing such bearish pressure on the transportation and financial sectors that could certainly see further lows. But at this point, I'm not going to say that we've started a correction in any market, because at the end of the day, things still look very bullish for the NASDAQ, as you can see over all the three moving averages. And when we look at the Dow Jones, we can still assume that we're just seeing another pullback. Even if we come down to that 50-day moving average and we find support there, it's just another pullback. So once again, for those of you saying that this is the start to the correction, I would hold onto your pants for now and tell yourself to take a step back, because at this point, all we're seeing is normal market behavior: a push up, a push down, a push up, a push down, a push up, and a push down, right? We don't know if this crosses below that 22,700 area for the Dow Jones Industrial, then we can be worried because that signals that this uptrend has been nullified. But if we still see price action above the 50-day moving average, we could very well see one more push up towards these converging moving averages, and that could be the final say for the major indices, and then we see the correction. So there's really two scenarios. We either come up here or we break down here. And so until that plays out, we just don't know yet if the correction has started, and we can only assume that the macro trend being bullish for now is the dominating trend. And so at this point, I would highly encourage you guys to be precautious until we find out the ultimatum of all of this. So to move on, I don't want to take too much of your guys' Wednesday night. I know you guys enjoy these live streams. I do too. I want to talk about hash rate. It's doing exactly what we talked about, formed that cup and handle pattern, and it's starting to break out, about to see new highs. I think that it's already seen new highs. I saw a chart earlier today that was more updated. This one's a little bit lagged. It's only showing data up to May 5th. Today's May 7th. I'm pretty sure we broke an all-time high for hash rate. That's very positive as the halving is here in 4 days. But realize that miners are they're turning back on because the supply is about to get cut in half, and so they might as well take advantage of it now. The question is, are they going to sell once that's done, the halving comes? Who knows, right? We know in the past, after any sort of Bitcoin halving, we've seen either a consolidation, sideways price action for a few weeks, or we saw a downtrend before we saw the uptrend. And so realize that with all of these things coming together, I just want to give you guys those puzzle pieces and let you guys assume your analysis to yourself. So other than that, I do want to talk about how things are going to look tomorrow. You can see the Dow up 100 points, but nowhere near the highs that it recently saw. You can see we're still below that 24,000 Dow. The S&P 500 struggling to stay at that 2850 level, which is a crucial level for the SP 500. If we look at the SPY as well, we're looking at that 285 level. Very, very crucial support or resistance. It's a breakout area for the major indices. So understand that we need to be able to maintain that 2850 level. It's only Wednesday. We have 2 more days left. And so it's going to be interesting to see how things unfold here over the next few days. Wyatt Tanks on YouTube says, hey, Naeem, it's Jay from C-Slub. Keep going strong. Thank you so much. Mr. Speedy says, only OG alts with adoption community will last. Well, there's very few that have use case that we could justify. If you look at some of the bigger altcoins like Ethereum, for example, some of the bigger use cases were CryptoKitties, for example, and that's not going to be enough to have investor confidence if that's the only use case it has. Of course, there's no more ICOs. We've seen that pretty much disappear. And so it was a lot like the dot-com bubble where 99% of the companies didn't survive, but you saw some of the behemoths like Amazon and Facebook make it through the test of time. So Majran says, if Bitcoin goes down, how low would it go around? I'm looking at that $6,400 level right now, but that's going to continue to change. Once again, we don't want to look at the pullback yet until we know the destination of this uptrend because things are bullish. We can't deny that. The trend is your friend. Stick to that, right? You're only as good as your last trade. So if you want to sit here and think that you can catch the top, that's very risky. But if you want to take calculated trades like we did today with our short, then that's a lot better during times like this because you can really inch away those gains based on the price action. So Alex says, strange that the Dow hasn't fallen below 20K with how serious the economic situation has been. Too much money in circulation, keeping it up for good. Well, it's a lot of the federal stimulus. The day the Feds announced the stimulus packages is when we started to see the markets bottom out. And at the end of the day, yes, they may not be injecting liquidity directly into the markets, but understand when they're buying these junk bonds and they're buying corporate debt, that at the end of the day, the liquidity gets into the market in some way, shape, or form, and it pumps and brings things up. Sometimes they do that so that we have less of a harsh downfall. At one point or another, though, the market will come to rationality and it will realize what it's truly worth. And so we cannot count on the Fed for that, but we also don't want to fight the Fed. So at this point, things look bullish. Majran says, if you had to say how much percentage you would say it's going up, well, it's funny you say that. If you realize the upside potential right now, and I think this is the reason we're seeing so much sideways action in the major indices, which once again are going to affect Bitcoin, specifically the NASDAQ, as it's correlating with Bitcoin the most right now. But let's say we pull up the SPY, for example. At this point, if you were a logical investor, and you were to say to yourself, man, I want to exit all of my positions because at the end of the day, things are still very uncertain. This isn't like something that we've seen before in 2008 or 2000. This is comparable to the Great Depression with a 20% plus unemployment rate potentially. So if you were to say, where could I take my losses and cut things out? Realize that at the end of the day, sorry, I didn't mean to pull that up, but if you look at this chart and you look at the upside downside potential, so far we've seen a 35% increase from the recent bottom. And so for somebody to take profits here and cut losses wouldn't be so detrimental because the higher you go, the less the price will affect percentage. And even if we were to just go from our current price, or let's just take the recent high, right, towards that 100 and 200-day moving average, we're only 2% up for the SPY. Let's say we go all the way towards the recent high, the all-time high, it's only 14%, right? So I might as well just go and short the market a couple days and make my 14% than to hold an index fund and hope that I can squeeze out my gains when I've already seen 35% recovery for my portfolio. Why not take the rest of the loss, make it up some other way, right? So psychologically, the upside here is not that attractive compared to the downside. And so realize that if we were to continue down, it would take over 27% downside for us to reach the recent bottom, which happened less than 2 months ago. So we're closer to the top than we are the bottom right now, but realize that that's when things come to rationality and may see the pullback back down, right? We look at what happened during the Great Depression. The markets went all the way up to the moving averages, specifically the 200-day moving average, before correcting back down, seeing even further lows, a lot lower than the initial low that it formed, like we saw form here on the 24th of March. So understand that even if we were to go up to those moving averages, we're only talking 1 or 2% from the recent highs. And that is not that much for a conservative investor that's trying to cut their losses at this point and exit out. And I've heard many friends saying that we're selling off our equities, we're taking a step back just for now until things become more clear. And I don't think that that's a bad decision, knowing the amount of uncertainty that we're seeing right now. And all of the reactions that we're seeing from the Fed is proving and confirming the uncertainty that we're seeing, because when they take dramatic action, it means that something dramatic happened, right? So I hope you guys are enjoying this video. I'm going to wrap this up, but I wanted to make sure to go through that pattern from 2017 with those 8 green candles in a row and what occurred after that, because realize that once the market becomes greedy is when the shorts come in and you see the sell-off and the fools lose their money. And at the end of the day, the tricksters and company always end up on top. So realize that we want to stay careful, we want to be precautious, but we still want to trade these swings and the volatility as we always do, right? I got rats said, God bless you, Naeem. God bless you guys too. Thank you. It's been 28 minutes. I think I'm going to wrap up this video. If you guys have any other questions, join our Discord and post it in the crypto chat or the other chat or any other chat like the stock chat or Forex chat. And I'd love to get back to you guys. I'm going to wrap up this video. I'm still on the road right now, handling some very important things. But I will see you guys in the Discord and on Friday for our next live stream. Thank you guys so much. Alex says, good night, Naeem. Good night. Mohan says, I still feel upside in BTC. We're talking about it. It's bullish. Don't fight the trend. Don't fight the Feds. And remember, the trend is your friend. So Devious840 says, thank you for everything, man. Have a good night. Thank you, guys. And I'll see you guys on Friday. Snipers out.